Hello, everyone. I've got 6:02 on my watch, so let's get started with tonight's presentation. I hope that you're all having a great summer here in the middle of July now. And we're kind of in the middle of the summer housing market. So tonight we'll talk about San Diego real estate, what's going on locally here with our economy, with our population growth, and what's going on specifically with housing and how they all kind of interrelate and play with each other. We'll also go over some charts and graphs, which we'll share with you to show the most recent median sales prices for single family homes, condos, the number of days on market, what the typical list to sale price is over the course of the last month. We'll talk a little bit about interest rates today and what direction we anticipate the real estate market to go for the rest of the year. So with that, let me start out with a quick introduction. I know there's some familiar names that are signed in today and perhaps some new people. My name is Patrick Kappel. I'm the team leader of the Kappel Realty Group here in San Diego. We're a brokerage team based out of Compass, a large national brokerage, and we're ranked as the #1 team at the #1 brokerage in San Diego. So with that, we certainly know what we're doing. Beyond real estate brokerage, like you, I'm also a consumer. In fact, I was a consumer, a buyer of real estate before I got my real estate license and started working in brokerage full time, helping people buy and sell real estate. I bought my first property in San Diego 15 years ago, actually almost 16 now. And I started buying real estate while I was serving on active duty in the US Navy. I bought a property after every deployment and every promotion. So I ended up buying about a property every 2 years, 8 properties in 16 years, just every time I had an option. I was taking the advice of one of my mentors that I met when I was in my 20s, who said, Patrick, buy San Diego real estate as often as possible. And although a lot of my friends thought I was crazy in my 20s and 30s, I bought a San Diego property every 2 years. And I learned how owning real estate, specifically in San Diego, can change a person's life financially and really lead to financial independence. So that's why I started the brokerage team I have today, Kappel Realty Group. And our team goes out there to help people like you buy and sell real estate within San Diego. And we also help educate all of our clients. I look at our job not as a sales job, but an education job. With that, our team has sold over $500 million in just the last 5 years of San Diego real estate. I approach it from an education, and that's why we do webinars and seminars like tonight, because of the background you see in the center there. I have a master's degree in science, master's of science in real estate from University of San Diego, coupled with an MBA, focus in finance and economics from UCLA. And I started all that with a bachelor's degree at the US Naval Academy. So tonight, what we share with you is not just like some sales pitch, real estate agent, broker type of stuff. It is real academic, real data, real information to show you with what's going on in the San Diego real estate market. I've been doing these seminars now for about 5 to 10 years. And I don't say this to brag, I say it's because it's true. I have been right about every prediction I've made on what's going to happen in real estate. If you understand economics and finance, it's not too hard to piece together the puzzle of where we're at and the direction we're going in real estate. And as I mentioned, it's a team of us. It's not just me. In fact, I lead the team, but it's all the agents on the team who are out there in the field helping our clients. And at the end of tonight's presentation, if you want to work with the best team in San Diego to buy or sell real estate, give us a call, reach out to me, and you can work with myself and the agents within our team that you see in front of us. Last thing before we dive into the data is I do maintain a YouTube channel. So I will upload tonight's video to the YouTube channel. You can watch it again. You can share it with your friends, share it with your family. If you scan the QR code on the screen in front of you right now, it'll take you directly to the YouTube channel. And I recommend checking it out, irregardless, even if you don't want to watch tonight's webinar twice, because we have a lot of other amazing real estate educational videos. You can see some of the titles up here: Real Estate Investing 101, how to buy 2 to 4 unit properties, how to house hack, down payment assistance programs. If it has to do with real estate, we've probably got something on it. And again, you can just check it out with that QR code. Also, as I typed in the chat, if you have any questions at the end of tonight's presentation, type them into the chat, type them into the QA. If you want to follow up with me on a Q&A on a question, or if you'd like to work with my team to buy San Diego real estate in the future, best way to get a hold of me is my email, patrick.kappel@compass.com, which is in the chat, and you can see it in the top right here. So with that, let's dive into it. Questions at the end, but I welcome all your questions. Just type them into the Q&A. And let's get into it. Economic and real estate update. Tonight, I'm going to start out with what's I've been getting asked a lot of questions about: prices. What's happening with real estate prices, specifically in San Diego? Now, there's other markets in the United States where prices are actually going down. They became overinflated during the pandemic due to things that were short-term, not long-term trends. San Diego has a lot of economic factors that we'll talk about tonight that have created a prime situation for San Diego home prices to rise and continue to rise. Any of you that have known me or listened to me speak, I have been saying for over half a decade that San Diego real estate is actually undervalued, and we've seen that come to be true. Now, over the last year or two, median sales price for single family homes in San Diego have gone up over 16%, even with the high interest rate environment we're in. For the majority of 2024, mortgage interest rates have been around 7%. Just in the last week, in the last few days, rates have dipped a little bit below 7% into the high sixes. What I like to really convey and share with you on the chart you're looking at, the median sales price of San Diego homes, is that with today's high interest rate environment of 7%, we found our ceiling of what the consumer can bear with today's interest rates. And that ceiling is about $1.1 million. Now, mind you, at the beginning of this year, the median sales price was around $950,000 plus or minus. We have gone up about $150,000, over 16% in just the first 6 months of this year. And that is, again, with the 7% interest rate environment. Now that we've seen the glass ceiling of 1.1 million, what's in store for the future? Well, we've all heard that the Fed is likely going to start dropping interest rates this fall, most likely starting in September after the meeting that they hold in September. As interest rates go down, consumers' purchasing power goes up. We know that we have a housing shortage in San Diego. There's just not enough homes. As I've said for years, we don't have an interest rate problem. We have a housing inventory problem. As interest rates start to go down in the fall, and as they continue to go down next year throughout 2025, you will see this ceiling of $1.1 million get broken. And you will see home prices start to escalate above 1.1 million as buyers' purchasing power starts to increase. Now, as we look back over the last few years on home prices and what they did, we saw in 2020 and 21, interest rates were super low. They were in the 2s, they were in the 3s, and we saw home prices going up quite a bit, peaking out in 2022 at $1 million. And that peak was created because interest rates started going up towards the second half of 2022, or actually really around April, May. And as we went through the second half of 2022, we saw home prices go down when rates got into the 5s and then the 6s and then the 7s. But then consumers realized, and as I mentioned in webinars a couple of years ago, there is no interest rate problem. Interest rates can go sky high. Home prices will still go up because we have a shortage. And consumers and buyers started to realize that. And as we see at the beginning of 2023, even with 7% interest rates, home prices kept on climbing to where we are today at 1.1 million. Now, for those of you that might be first-time home buyers, don't despair. 1.1 million is a lot of money, but attached homes, and by that I mean condos and townhomes, which are typically starter homes in San Diego. In fact, my first two properties I bought when I was younger were both condos. It wasn't until my third home that I actually bought a single family home. So for first-time home buyers, what are we looking at? We're looking at this graph. And this graph is attached homes, which again is condos and townhomes, attached homes. And those prices are still going up at a pretty good pace. We just hit a new record high for attached homes last month of $695,000. We'll probably break through 700,000 soon. Why are we seeing these attached homes continue to rise? Well, single family homes have kind of plateaued with today's interest rates. It's because there's a lot of folks that still have the buying power at the $700,000 range that are still in the game, still buying homes. And also perhaps a bigger reason is if you already, usually someone buying a single family home in San Diego, they already owned a home that they're selling to buy the single family home. Maybe it's a husband and wife, they have a condo, they just had their second baby, and now they want to buy a house. They don't have to sell their condo and buy a house. And they might not want to right now with interest rates so high and they've got a low 3% mortgage. On the other hand, your first time home buyer, they're renting. They're paying 100% interest payment is what I like to call it when you're renting. So these renters are still in the market buying up condos, buying up townhomes. Now, as much as I said single family homes will start appreciating again and quickly once interest rates go down and will break 1.1 million, the attached homes like condos and townhomes will also continue to escalate in price appreciation in San Diego as interest rates go down. This chart simply shows you our median price of both attached and detached homes. Detached homes in blue and attached homes in red. The graph on the bottom, you can kind of see the trend line going back over the course of the last decade plus to 2012. And again, you see that little bit of a plateau on single family homes. Doesn't mean single family home prices are going down, at least not anything statistically significant, but it does mean when we're around 7% rates, 1.1 is where homes are going to go. And that's where we're at right now. As rates go down though, you will see those prices go up. This chart should be the most eye-opening chart for you. This is the inventory of homes for sale in San Diego. And what I'd really like you to focus on is taking a look at what that inventory was at before COVID. Before 2020, you can see that during a normal market, we would typically have 8 to 12,000 homes for sale. Single family homes, 8 to 12,000. In the summer markets, we'd have over 10,000. Look where we are today and look where we have been for the last 4 to 5 years since COVID. We have not broken more than 4,000 single family homes for sale. And typically in San Diego County now, there's about 2 to 3,000 homes for sale. So what does that mean? We have 25% the inventory today compared to what we had before COVID. Why is this? We simply have not built enough homes, and we have what we call the lock-in effect. There's a lot of homeowners sitting on a 2 or 3% mortgage rate, and they don't want to sell their home and give up that rate to trade it for a 7. As rates go down, and certainly once they get into the 5s, we'll likely see some of those home sellers sell their home, give up the 3% mortgage, trade it for a 5 because maybe they had another baby or two and they need that bigger house. But right now, there's just not a lot of inventory out there. This last chart that I'm going to show on the latest monthly data for housing shows you what percent of original list price are properties being sold for. Now, typically throughout the United States, we see like 95, 96%, but San Diego is one of the strongest real estate markets, not just in the nation, but in the world. So usually San Diego homes sell within 2% of their list price. And as we see here, right now we're at 99.6% of list price. Of course, there are outliers. Some homes sell for more than list price, some sell for a lot less. It really depends on how intelligent the real estate agent is and how good they are at their job. A savvy real estate agent For your typical home, we'll price it a little bit below what it's worth to create a bidding war, bid the value of the property up, and sell it for more than list price. Then you've got luxury homes, which will often be priced a little bit high and they'll come down in price. Then we've also got another term in real estate that we call agents buying a listing. Those are real estate agents that just tell a seller whatever they want to hear, even if it's not true. Maybe the seller has an $800,000 home and the agent says, yeah, I'll sell it for 900,000, even knowing they won't. Be wary of those. Those usually sit for a long time and sell for a lot less and can drag these numbers down. What I am typically seeing right now in the market is homes selling pretty much right at, or if not at, slightly above their list price. So why are home prices in San Diego staying so strong, even with these high interest rates? Comes down to supply and demand, and we simply don't have enough supply. Doesn't matter what happens with interest rates, doesn't matter what happens with the elections this fall. All that matters is supply and demand. And when I speak of supply and demand, obviously supply is the amount of housing we have available to people to live in. When you think of demand, I don't want you to think of just the number of people that live in San Diego, but I want to think of you to think of who lives in San Diego and who is moving into San Diego. And we'll get into that in a minute. And we're going to talk about the type of people moving into San Diego being those that work in highly compensated jobs. They have high levels of education. They work in tech. They're rather wealthy and they're driving up home prices. And the folks moving out of San Diego are the ones who typically can't afford housing anyway, so they don't really affect home prices. It's the folks moving in that affect home prices. So to cut to the chase, and then we'll dive into a lot more data, what is the bottom line? What's really going on with housing? Number one, there's not a real estate crash on the horizon. I don't hear that as often as I used to, but anyone who says there's a real estate crash on the horizon in San Diego, stop listening to them. They don't know what they're talking about because they don't understand supply and demand. There's just not enough supply. Number three, over the long term, real estate prices will keep going up, certainly in San Diego. Rent will keep going up for those of you that might be renters. And now is a good time to buy real estate. And I'll dive into that for just a second right now and cover it a bit more. But why is now a good time to buy real estate? Because, well, interest rates are in the sevens and the high sixes. Demand is a little bit muted. You have some people that are waiting for interest rates to go down. Do you want to buy with a lot of competition, or do you want to buy real estate when there's just a little competition? If you wait for rates to go down, you will buy with a lot of competition and you will pay more for the house. As I always like to say, especially to first-time home buyers, and I didn't know this when I was a first-time home buyer before I worked in real estate, but you can refinance your mortgage an unlimited amount of time. If you buy with a 7% interest rate, a year later you can refinance at 6. A year later you can refinance at 5%. You can always refinance your mortgage to a lower interest rate, but you can never refinance your purchase price. The price you pay for the house is set in stone forever. And as we mentioned 5 minutes ago, as interest rates go down, prices will likely go up. So the intelligent buyer today buys now, well, prices are where they're at, interest rates are where they're at, and they refinance maybe in 6 to 12 months when prices are higher, interest rates are lower. I always like to use the analogy too. San Diego, San Francisco, circa 1990, and what do I mean by that? Well, San Francisco went through a huge economical boom due to technology, specifically due to the silicon chip. Silicon chip really began being mass produced in the 1990s. Computers started popping up in people's homes, and the powers to be decided that San Francisco would become the hub of all the production of these tech companies and the silicon chip, thus the nickname Silicon Valley. The same thing is happening today in San Diego, except it's not silicon chip, it's biotech and just tech in general. As you know, San Diego has become a major biotech hub in the world. So what does that got to do with real estate? Well, keep in mind, it was in the 90s that San Francisco really went through that tech boom. And look what happened to San Francisco real estate with a tech boom. You can see it on the chart in front of you. The gold and black lines are the values of real estate in San Francisco throughout the 1990s into the 2000s. And you can see how much the economy affected real estate values. The other two values down below in red and blue are California and US median home prices. We're experiencing a very similar tech boom in San Diego right now as we speak. And the tech boom will continue for years, if not decades to come, backed primarily by biotech and the technology workers that are moving into the San Diego region. Now, we talked about mortgages briefly. As you all know, certainly, well, in my adult lifetime, rates are at the highest they have been in the sevens. Now, we've come off, fortunately, we didn't hit 8, and we've come off these sevens a little bit throughout this year. And in just last week, as I mentioned, you can see on the far right, we dropped into the high 6s. But I really want to impress upon you that if the median price in San Diego is hitting all-time highs right now, around 1.1 million with 7% interest rates, what's going to happen when interest rates go down and buyers have more purchasing power? You will see home prices go up. And I like to stack these two charts on top of each other, the top one being mortgage interest rates throughout time, going back 4 years, as well as home prices in San Diego going back about 3 years. And you can see that we don't have an interest rate problem. If we did, home prices would have gone down and stayed down with high interest rates. However, when rates started going up a bit, home prices took a little dip and then came right back up and hit all-time record high home prices. At the same time, we were hitting record high mortgage interest rates, highest we've seen in the last 20 years. What this tells us is that the true underlying problem is a lack of housing. We just don't have enough. And like any investment, and let's be honest, even though you live in it, even though you raise a family in it, your house is still an investment, and it'll probably be the investment that makes you wealthier and gives you a bigger return than any other investment in your lifetime, including your 401k. But this house, this investment, will keep on going up even faster as interest rates go down throughout the fall and next year. How do we know that? We know it based on data. Within the real estate industry, this chart actually came back out in 2023, showing where buyer demand typically falls based on interest rates in normal markets. Right now, we're kind of in this limited space. Rates above 7%, buyer demand really becomes weak. Rates between 6.5 to 7, there's limited buyer demand. It's when rates get below 6.5 and certainly below 6, where buyers start running into the market and gobbling up homes. So again, if you're a buyer out there, you might want to purchase a home before demand gets super strong. Buy it today with a 6.8, 6.9 interest rate, refinance it in 12 months in the low 6s, maybe high 5s, depending on rates, where rates are 12 months from now. So why are values going up so much? We've kind of hit on the fact high interest rates, but we still have high values. Comes down to numerous reasons. John Burns, which is probably the foremost real estate analytical company with a lot of economists looking at the real estate market throughout the US every day. They just came out with a recent, not article, but really about a 50+ page publication on the entirety of the United States real estate market. And a big thing of note is John Burns, who the company combs the entire United States, found that Southern California real estate is outperforming every other market in the entire United States. And here's 4 bullet points of why they say. First of all, pent-up demand from lack of supply. Years and years of us not building enough in Southern California. Number 2, good high-paying jobs. The majority, the state with the largest economy, bar none, is California. In fact, California's economy, if it were a country of its own, would be the 5th largest economy in the world, right up there with Germany. And with our large economy, our high-paying jobs, There's a lot of international buyers that are coming back into California real estate, specifically Southern California real estate, because they see SoCal real estate, folks, as one of the best investments in the world. That's why we tracked more investment dollars from out of the country than just about any other real estate market. And last but not least, you see on number 4, guys, real estate values have gone up throughout the country, in the Midwest, in Texas, in Florida. And oh, by the way, if you watch the news, you see that they deal with hurricanes, they deal with heat waves, they deal with monsoons, they deal with mosquitoes. We don't have mosquitoes in Southern California. And it's no surprise that although a lot of people initially during COVID started moving to Texas and Florida because it's so cheap, once they realized that it's not super comfortable necessarily living in parts of those states, they've decided they want to live in Southern California, probably one of the most comfortable climates in the world. In fact, as you see on the right, Apple was going to move an AI team from San Diego to Austin, and the workers voted with their feet, and they said, no, we're going to quit Apple if you move us to Texas, because we want to stay in Southern California, specifically San Diego. We've also seen interest rates skyrocketing in these other markets, making them just as unaffordable as San Diego. So especially for those earning 6 figures that they can live wherever they want to live in San Diego. Now, the next 2 charts are kind of tied to each other. They show us the employment growth in Southern California market areas compared to other high in-migration metros. So Austin, Houston, Los Angeles, Orange County, Phoenix, Riverside, and San Diego. These are some of the fastest growing markets when it comes to employment growth. San Diego being up there, of course, in Orange County, 2 of the hottest markets right now. And although we have comparable economic and job growth to these other markets that you might find in Texas and Arizona, I want you to take a look at the next chart. And the next chart is going to be housing growth. We're all growing a lot of jobs. Who's growing housing? Who isn't? And you can see the disparity here. Houston building a ton of homes. Phoenix, Austin building a lot of homes. Riverside and LA, not so much. Who's building the least amount of homes? San Diego in Orange County. Is that good? No, we need to build more homes. But as an investor, as a homeowner that wants to ensure the value of your property stays where it's at and preferably appreciates a lot, is that good? Yes, it is. Folks, when it comes to investing, doesn't matter if you're investing in gold, silver, stocks, bonds, or real estate, if your investment, a lot of supply is added to it all the time, the value of your investment goes down. Think about gold. If you invest in gold bars, and all of a sudden a huge supply of gold was discovered and it came to the market, what's going to happen to the value of gold? It's going to go down. That's what happens in these markets like Houston and Phoenix and Florida. It's so easy to add real estate in the Midwest and the Southeast. Where is it not easy to add real estate? San Diego, Orange County, because we're constricted by Camp Pendleton, National Forest to the east, Mexico to the south, and Pacific Ocean to the west. We just can't add inventory. So although, as you see on this previous chart, we're adding just as much employment, we're not adding the housing. And not only are we adding employment, we're adding highly compensated, highly paid employment. For this reason, John Burns came out in 2024, and of all the top 50 markets in the United States of America, the top 2 markets ranked as very strong, bar none, are San Diego and Orange County. That's right. If you own San Diego real estate, you own real estate in the most desirable market in the United States. And by the way, United States real estate is the most desirable real estate in the world. So if you own San Diego real estate, you own the most desirable real estate in the world. San Diego and Orange County, both up there as the top 2. These strong markets are based on how strong are prices holding, how much are they appreciating, how quickly are homes selling, how high is demand, How are demographics affecting our market? Now, I mentioned during the COVID years, a lot of people thought, well, I'm going to go buy in the Midwest, Texas, Florida, Colorado, Utah, Idaho. Guys, those markets are getting beaten up. Look at the markets that have a lot of orange and a lot of yellow. And you see those in these kind of cheaper markets that just don't hold up over the long term compared to Southern California, strongest market in the globe. Um, why have we not built enough homes? Well, it goes back to the Great Recession, which many of you remember, perhaps lived through the Great Recession, 2008, 2009. Leading up to the Great Recession, we overbuilt in the United States, built too many homes. And with that huge amount of supply and not enough demand, there was a big crash. And for the next 10 to 20 years, we simply did not build enough. A lot of housing developers lost their business, lost their jobs, lost their money, didn't come back in. And those who were still around were a little bit more hesitant. So we simply haven't built enough, creating a situation where at the end of last year, we had less homes for sale than any other year recorded going back 20 plus years. There's just not enough supply, folks, in the United States, making housing a great long-term investment to hold your value, especially in San Diego. Now, it would be bad enough if we didn't build enough housing for the current generations, but it's worse. The largest generation, millennials, followed closely by Gen Z right behind them. This large generation is now hitting their 30s. And these first-time home buyers don't have housing available for them. So you have the perfect storm of the least amount of housing being built over the last 10 to 20 years, intersecting with the largest demographic population, millennials and Gen Z, hitting first-time home buyers age. Because of that, it's created the perfect storm for a lack of inventory, highest supply, highest demand ever, and that's causing and will continue to cause price escalations in real estate values, especially in extremely desirable areas like Southern California and San Diego. For this reason, that's why at the end of last year, articles were popping out left and right, ranking the hottest, the strongest markets in the nation. San Diego at the end of last year was ranked number 4. As I mentioned, now halfway through the year, we're ranked within the top 2. There were numerous websites coming out with San Diego and many Southern California cities as being some of the hottest markets to buy in, where you're going to see some of the most appreciation. In fact, when you split it up by region, what you're looking at now is not just the cities, but the region. Which regions are the strongest real estate markets? And it's not surprising, it's the coastal markets. A lot of times when I meet real estate investors, they'll say, well, I want to invest in the Midwest because it's cheap. Guys, in life, if you invest in cheap, you get returns that are cheap. Just keep that in mind. And as we see here, a lot of these cheap markets are some of the worst markets now ranked by John Burns as far as real estate strength. And the more expensive markets, guys, when you invest in high value things, you get high value returns. We are fortunate, at least those of you that live in San Diego, you're fortunate because you can buy San Diego real estate easier than anyone else in the world, because you can buy with an owner-occupied loan. You can buy with 0% down. You can buy with 5% down. You get a lower interest rate. Everyone else in the globe that doesn't live in San Diego has to use investment loans to buy in the hottest market in the world. You get to use an owner-occupied loan. And again, as you can see, Southern California ranked number 1 in the nation, real estate, for holding value, maintaining value. Now in San Diego specifically, I told you nationally, we simply have not built enough real estate. In San Diego, that is even more true. If you look at our population going back to the 1940s, 1947, San Diego's population was just over 500,000 at 520,000. Now, fast forward over half a century to 2023, just last year, we hit 3.28 million. Our population has grown by 6x. over the last 70 plus years. Yet we have not built the housing for a 6x population growth. You can see the permit issuance really peaked out around the time in the 1980s. We saw about 40 some thousand permits being issued. Ever since the 1990s, it's rare that we break a year with over 10,000 permits being issued. And the truth is, to house our population and the growing population we have in San Diego, we need to build over 20,000 homes a year. We have not built over 20,000 homes since 1986, the decade I was born. And guys, this is why I say it doesn't matter what politicians say, it doesn't matter what they do. We will not solve the housing crisis in our lifetime. We just won't. We can attack it, we can try and build more, but we're not doing it. So I know that for the rest of my life, and I'm 43, I probably got another 40 years ahead of me. I know for the rest of my life, real estate is probably the safest, most secure, highest return investment I can put my personal money into. And I know that San Diego tops the list of all markets. That's why you ask me, ask my wife, the majority of our money goes into San Diego real estate because it's the smartest, safest place for me to put my money. And as a guy with an MBA and a master's in real estate, and I've been doing this almost 2 decades, if that's what I'm doing, it's probably a tea leaf on what you ought to do too if you're thinking of investing. Now, you might hear rumors that our population's going down. Those are just rumors. They are not true. You can see during COVID, we took a bit of a dip, not much, but since COVID, our population has come back and come back strong. And I want to really impress upon you the 10,000 people that left in 2021, the 2,000 that left in 2020. Do you think those were the highest paid employees in San Diego? Do you think those were people that could afford San Diego and our high home prices? Not at all. The folks moving out of San Diego are typically the ones that can't afford it. Now, our population growth over the last 5 or so years, or 3 to 4 years, has been over 10, almost 20,000 people a year, and that growth is projected to maintain itself. Now, along with that growth, you might see here current 18,100. That doesn't mean 18,100 people moved in. That means more than 18,000 people moved in, more than 18,100 moved in, because there's also people moving out. And I gotta impress upon you that people moving in are highly paid, highly compensated, educated folks that are driving up our home prices. Why do I say that? Look where they're moving from. Where are people moving from when they move to San Diego? It's up here in the top left. Los Angeles, San Francisco, San Jose, East Bay, Boston, Orange County, New York City. Are those expensive markets or are those cheap markets? Guys, those are expensive markets. Everyone moving to San Diego from these markets, they see San Diego real estate as cheap. 1.1 million, that's super cheap if you're moving from San Francisco, San Jose, New York, and they're buying up our real estate and they will continue to do so. Where are people moving to? Tampa, Tucson, Austin, Fort Worth. You can see the list in the bottom left. Those are cheap areas compared to San Diego. So it's the folks who can't afford San Diego moving out. It's the folks who think San Diego is a bargain moving in. That's why it's important to know not just how many people are coming and going, who is coming and going, because the who is what will determine prices going into the future. Now, I mentioned that we need to build over 20,000 homes a year. Where do you think I got that? From this chart, directly from a research project that the city of San Diego hired, or actually the county of San Diego hired a firm to determine, based on population growth, what do we need to build? Over 21,000 homes a year. How many have we been building since 2015? Less than 10,000. 9,027. Guys, we are building less than 50% of the homes we need to build. This chart alone ensures real estate values will continue to hold and continue to go up in San Diego. Now, this gap in net worth is widening. People are always talking about the wealth gap in America. The easiest way to close the wealth gap is get people into housing. Stop renting, buy a house. The number one factor between the haves and the have-nots is, do they own a house or do they not? You show me a 60-year-old person, a 50-year-old person, and I don't need to know anything about them other than, do they rent or do they own? And I can tell you if they're wealthy or not. In America, the wealthy own. Renting is like making 100% interest payments for the rest of your life and never owning the property that you live in. So economic growth and expansion affecting San Diego real estate. What is happening specifically here that's bringing all these people in? Bringing them in from Orange County, from Boston, from San Francisco, from LA? It's our tech. The chart you're looking at in front of you is venture capital investment into the fastest growing tech cities in the United States. And as you can see, San Diego ranks number one in a lot of areas, including venture capital tech growth during the pandemic years. In fact, we're nearly 2 billion above second place, Seattle. When you have that much growth in your tech, in your economy, in your workforce, and that much of a demographic shift from blue collar to white collar, you can't not have it affect the value of homes going from now into the future. This chart shows you real granular who is moving in. The previous chart was the money, $9 billion. This chart shows you who. In this publication, it's now almost it's 2 years old, but I keep it up because it's very important. This publication was created by LinkedIn, and no website knows better than LinkedIn who's moving where. Because in LinkedIn, you put in your college, you put in your job, you put in your job description, you put in the city that you live and work in. All this is just data collected by LinkedIn so they can share with us information like you see in front of you. Which city in America had the greatest tech growth during the COVID years? And again, San Diego ranking number one. And it's this shift of people. Guys, real estate values are what they are because of people. You show me a city, you tell me what the main industries are, I'll tell you how much housing is. And in San Diego, our main industries are some of the highest paid industries in the world. And back to that population growth, you can see now a map of the entirety of the United States, and you can see we just had a census done, right? Once every 10 years, a census. And this graph shows you, based on the census, which counties are shrinking, which ones are growing. Here's a piece of advice. Don't buy real estate in counties where population is going down. You will lose money. The value of your real estate will stagnate, if not go down. Buy real estate in counties where population is going up. The darker the green, the better. The more that population is growing. And you can see you don't get a darker green than San Diego County, making it again one of the minority of counties in the United States that is a good buy. In fact, look at all of Southern California. Pretty green. These are regions in the US that are growing. But I also mentioned, don't just look at the color of green or pink, look at who is moving there. And again, we already know from my previous charts that there is no city, no county in America with a bigger, faster infusion of venture capital money and venture capital employees in tech and biotech workers than San Diego. So what should you do? Wait to buy or buy and then wait? I think I've already answered that question, but just to be clear, as I'm telling all of my clients, buy now, refinance later. Why is that? Because as you see in the graph in front of you, we're around 7% interest rates today. A buyer that can afford a $4,000 mortgage a month today qualifies for about $750,000. That same buyer that can afford $4,000 a month, if rates were to go down to 4.5, they could afford $1 million. Now, when rates go down, it's not like sellers all of a sudden decide, I'll be a nice, kind seller and give you this home super cheap. Sellers know what home prices are based on what buyers can afford monthly. And as interest rates go down, home prices go up. Always happens. And you can see in the example in front of you, just a 2.5% drop in interest rates can cause home prices to go up 33%. And we'll certainly see that happen in San Diego. So the answer is buy now while real estate prices are relatively low compared to what they could be in the future. Now, a lot of times buyers come to me and they're like, yeah, but prices are so high compared to what they were 4 years ago. Here's another secret to life. If you want to be successful in life, really in all areas, not just real estate finance, you need to be able to look into the future and make projections. Everyone can look backwards in time. Everyone knows what happened yesterday. Everyone knows what happened 2 days ago. If you really want to be successful in life, you have to be able to look into the future. And I'm telling you, yes, real estate prices were cheaper yesterday, cheaper 2 years ago, 3 years ago. You should have bought then. But the best time to buy is yesterday. The second best time to buy is today, because in the future, you will pay more. And there's ways to still save today. Things like the 2-1 buy down program. What's that? You can buy today with a much lower interest rate than what you're seeing advertised by getting the seller to buy down your interest rate for the next 2 years. And then most likely in the next 2 years, you'll refinance to a lower rate anyway. There's also a lot of down payment and grant programs available to many buyers, especially first-time buyers, that we've helped many of our clients buying their first homes so that they can get government money to buy their first home with a grant or down payment assistance. I also get this question a lot. Isn't renting cheaper than owning? Yes and no. If you look at the cost to own versus rent and how much it's going to cost you right now this month, renting is cheaper. But go back to what I said a minute ago. You have to be able to see into the future if you want to be successful. Fortunately, there's a lot of tools you can use to see into the future and know they're not crystal balls or Ouija boards. It's math. When we look into the future with math, we can see what's going to happen. So before I do that, I like to look back on the past to gain some trends towards the future. The first is San Diego is one of the top fastest appreciating markets on rent. Our rent went up 29% in just 3 years. And we see with that, San Diego has surpassed San Francisco now as the most expensive place to rent. Couple that with owning versus renting, and we see that owning beats renting if home prices rise by just 3.15% per year. And in the United States, that happens 70% of the time. So if you're playing the odds, which you ought to be, you know that owning is cheaper than renting. Additionally, although home prices nationally average 3% appreciation, in San Diego over the last 50 years, our average rate of appreciation has been 6% plus. But I mentioned a minute ago that there's a crystal ball we can look at called math. What I want to share with you is this confusing looking spreadsheet. And trust me, there's a lot more number crunching and cells and columns behind this, but let's focus on the outcome. What most people think about rent versus own is, well, how much is my payment today? I own a $500,000 condo downtown in Little Italy. That $500,000 condo, it rents for about $3,000 a month. So if you rented it today, you would pay $3,000 a month. And you see that here on the far right, payment year one, $3,000 a month. Now, if you buy that $500,000 condo and you put down just 5%, maybe a government down payment program, you put down 5%, your monthly mortgage payment plus taxes and insurance and HOA fee is going to be $3,990, almost $4,000. Now, I know math. $4,000 is a lot more than $3,000. And this is why most people who really don't understand math and how it works going into the future would say 4,000 is more than 3,000, so it's cheaper to rent than it is to own. And I would say that's true if you're going to die in a month or two. But if you're going to live for a few years, a few decades, which I hope you do, it is much, 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 much cheaper to own than it is to rent. And we see that when we go out 30 years in this financial model. Over a 30-year period, if the renter has rent increases of just 5% a year, that renter will pay $2,391 over the course of 30 years. And by year 31, if their rent is going up just 5% a year, their monthly rent is over $12,000. That person is never retiring. Now, if the same person said, you know what, even though 3,990 is more than 3,000, I'm going to buy because I know that's a good long-term decision. The person who buys it over 30 years of mortgage payments pays 1.597, which is $800,000, 794,000 to be exact, less than what the renter paid over those same 30 years. And after 30 years, your mortgage is 100% paid off, and that owner is now paying just $2,042 a month. It is so much cheaper to own when you look past day one, month one, year one. You have to look into the future, use a little bit of math to know what's best financially for you. Now, this spreadsheet's kind of confusing. Reach out to me. If you work with my team, we can put together a spreadsheet like this for you and your specific situation on renting versus owning. Now, between the two, I know that we don't have enough supply. I know that there's a huge cohort of millennials and Gen Z in their 20s, in their 30s, that want to get out there and own a home. And the most intelligent, some of the highest paid Gen Z and millennials are moving here to San Diego, and their number one goal is still that American dream of owning a home. It even beats retiring and a successful career. In fact, when a recent survey was done with Gen Z and millennials, more Gen Z and millennials wanted to buy a house than Gen X and baby boomers. Over 95% of these two huge demographics want to buy housing. They want to buy it in San Diego, and they're moving here. The primary reasons they want to buy are what you would imagine: emotional, lifestyle reasons, place to call home, raise a family, and also, of course, the financial, the rational reasons, but all the reasons we've discussed today. The downside is they all feel like there's a big roadblock, a hurdle they have to get through. They feel like most of them in number red, or almost a third, they think they have to save a lot of money for a down payment. That's just not true. We'll talk about that in a minute. And they don't know where to begin. So let's talk about both of those. Down payment. Guys, there are over 20 down payment assistant programs available to people that live in San Diego to buy their first home. And a good example of a first home, again, is a condo, $600,000. And if you tap into one of the 3.5% down payment assistant programs, we can help you get over $21,000 in free money to buy that home. I'm telling you, every month, almost every week, my team is helping one of our buyers buy a new home with down payment assistance, getting money from the state of California, getting money from San Diego. And every month we are giving one of our clients a set of house keys, and that client didn't have to put any money down. It's one thing that we specialize in amongst many others. And in fact, in just the last year, our team has helped our clients apply or gain access to over $1 million in down payment assistance money. Guys, that's $1 million we got for our clients tax free to go out there and buy their homes. There's a lot of amazing programs out there. The other thing I want to touch on is the down payment is usually the biggest challenge that first-time homebuyers feel they face. We got that covered. We'll get your down payment covered. The second biggest challenge is, where do I start? The biggest mistake that consumers usually make is, before they talk to a real estate agent, they start looking on Zillow. Here's a secret. Zillow is not a not-for-profit company. Zillow is a profit company. What do they sell? They sell your data. The moment you click on a real estate website, I don't care if it's Redfin or Zillow or you name it, The moment you click on that website, Zillow, Redfin, all the others, they sell your data to real estate agents. And real estate agents pay thousands of dollars to get your name, to get your phone number, to get your email. Don't fall for that. Oftentimes, the real estate agents that are buying your data are probably not going to be the best real estate agent for you to work with, because that's how they get their business. They just buy it, not because business comes to them. So what's your other option? Talk to a team that coaches you, that educates you, and hand walks you across the finish line. That's the team that I've built. That's the brokerage that our agents belong to. And I'll end it on this last note, that in order to cross the finish line and get those keys in your hand to your first home, your second home, maybe your first investment property, in order to cross the finish line, you must first cross the starting line. So what does that starting line look like? What it often looks like is a one-on-one meeting with you, me, and one of my team members. Oftentimes we do that initial meeting on Zoom. It takes 60 minutes. We learn about you, what you want to do, and what your goals are. And at the same time, we answer any and every question you have about real estate. And if you're interested in buying your first home, your second home, your 50th home, or your first investment property, shoot me an email, reach out to me. We'll help you get up to that starting line, and we'll help you walk across, run across that finish line with a set of keys in your hand. Because as I mentioned before, I can't impress upon you enough, who you work with matters. I've said it before and I'll say it again. The bar to entry in my industry, real estate, is way too low. You do not want to work with someone because they're a friend of a friend, because they're a family member, because whatever, fill in the blank. You want to work with someone when making the biggest financial transaction of your life. You want to work with someone that's a professional that understands real estate. Every agent on my team owns real estate. Most of them own multiple properties. Every real estate on the team is an award winner, either locally or within the state level, for how much they have done in real estate. Every real estate agent on our team has at least a bachelor's degree. Over half of them have master's degrees. A third of them are military vets. Who you work with matters. And I wouldn't have created the team I have today if I didn't think it could be the best real estate team in San Diego. With that said, I look forward to hopefully having the opportunity to work with many of you in the future, and more importantly, to educate you on real estate, the home buying process, and maybe after you buy your first home, how to buy your second home, how to buy an investment property. And if you want to really just cut to the chase, again, check out that YouTube channel where we have many other videos, each of them between 1 to 2 hours, that'll teach you a lot more about real estate, buying your first home, down payment assistance programs, investing in real estate, and many other topics. With that, the best way to get a hold of me is the email you see in the top right, patrick.kappel@compass.com. And I see for the first time ever, I am ending right on time. It's 7 o'clock. If there's any questions, I'll stick around for a few minutes. Other than that, I appreciate you joining us tonight. Thank you.